Welcome to Industry Focus, the show that dives into a different sector of the stock market every day. Today is Wednesday, November the 7th, and we're talking healthcare. I'm your host, Shannon Jones, and I am joined via Skype by healthcare specialist and all-around good guy, Todd Campbell. Todd, how are you?
I am doing great, Shannon. Thanks. How about yourself? How are you doing, Shannon?
I am doing well. I must admit, I'm excited because we actually now have actual fall weather. I'm not so excited because it has been raining cats and dogs here in Alexandria for the past 2 days.
Yeah, I made the mistake of actually trying to mow my lawn this past weekend, thinking that maybe I would get through. I got halfway through. I was just sinking into the ground. The ground was so wet. Oh, so that's listeners. Don't bother going out and mowing this one until it's dried out.
Always
public service.
Wise words from Todd Campbell. Thank you, Todd, for that. But I'm even more excited because on today's show, we're doing a news roundup. Todd, I'm actually excited because finally I feel like in the month of November we've started off with a bang in healthcare. Got some big news, of course, first of which was Alkermes' big day in court with the FDA last week, and also too finally some M&A action that happened with Illumina. Todd, all around I feel like it's been so quiet on healthcare, and now we're actually starting to get some interesting news.
Yeah, you get that big push into the end of the year. And then in January, early January, when they get together at the JP Morgan conference, that's usually when you get all sorts of exciting news that goes out. And you've got ASH coming up in December, too.
Yes, ASH is one of my favorites. Always big surprises, big letdowns, of course, but big surprises. But yeah, this is really my favorite time of the year for more reasons than one.
Yeah, so I mean, listeners are going to have lots of great stuff over the coming weeks, right? Keep tuning in. But yeah, for this past week, Shannon, we had that FDA smackdown of Alkermes, and then the really surprising news, shocked me anyways, with Illumina stepping up and buying PacB.
Yes. Yeah. So let's dig into Alkermes first. So for our listeners on November the 1st, Alkermes, and that's ticker symbol ALKS for our listeners, had the opportunity to make its case for its depression drug ALKS 5461, we'll just call it 5461, in front of an FDA advisory panel of experts. And 5461 has been studied, is still being studied in treatment-resistant major depressive disorder. But this drug in and of itself has had quite the roller coaster history. I mean, even looking at earlier this year, Todd, in April, at one point you had the FDA issuing a refuse to file letter, which is, it's in the grand scheme of things, a complete response letter is terrible. But when the FDA refuses to even look at your drug because they say it's not complete enough, that is like red flag of red flags. But 2 weeks later, all of a sudden, the FDA did an about face. Alkermes came out and said that they were able to, quote, clarify some things with the FDA. But Todd, what is all the fuss with this drug, 5461?
Yeah, it makes you wonder whether or not they really clarified things or if they basically just strong-armed and said, we're filing it anyways.
Exactly.
And the FDA said, hey, do it at your own risk. Do it at your own risk. Because overwhelmingly, and I urge everybody just to go out and check out the notes or the backgrounder that was put together by the FDA for the members of the advisory committee. Just as a refresher, what ends up happening with many of these drugs that go through the FDA process of approval is that the company will make a presentation in front of a panel of experts in that field and try to convince that panel of experts that their drug is both efficacious, so it works, and that it's safe, so it doesn't harm anybody. Relative to the efficacy that it delivers. And that's what we're talking about. The FDA advisory committee panel meeting met to weigh in on 5461, and they voted overwhelmingly against its approval. I think a vote against approval was 21 to 2. Yeah, 21 to 2 overall against approving it. 20 to 3 said that the Alkermes did not provide substantial evidence of the drug's effectiveness, which is crazy. Only convinced 3 people that this FDA that this drug was approvable for efficacy. And then on safety, it squeaked by with safety barely. 13 votes in favor on safety versus 10. And I think that if you read the backgrounder that was put together by the FDA for these committee members, you'd certainly feel a slant against this drug by the FDA. And it'd be interesting to, I guess you just would assume that probably factored into the committee members' decision.
And there were so many interesting things, and I would encourage any healthcare investor, if you are investing in the biotech space, I would say this is just as important as reviewing SEC filings, but reviewing the advisory committee briefing documents, to your point, Todd, is crucial, because oftentimes a company may issue a press release, or they'll say, you know, we had very successful talks with the FDA and we're both on the same page. And really, I think what this panel demonstrated and highlighted is that that's not always the case. And so in looking at this drug, it was novel, not just the drug itself, but even too from like a study design perspective as well. Todd, what can you tell us just about the drug itself? Because this is not your typical antidepressant.
Alkermes, I think, was thinking that because there's such a big need for new therapies that can address depression, I think they were thinking that they could push this over the finish line. There's about 15 million people, Shannon, in America who suffer from major depression. About 3 million new cases of major depression are diagnosed per year. And, you know, sadly, or, unfortunately, 60 to 70% of people with depression fail to respond to the existing antidepressant therapies that are on the market. And less than 30% achieve remission in depression on the first line of therapy that they try. So what ends up happening is that, you know, they go through this multiple lines of trying and failing on different antidepressants, hoping to find the right one that'll work for them. And part of that is because we don't fully understand the cause of depression. We can make some assumptions about biology, and we can make some assumptions. We know that the environment can factor into the causing it as well. Most of the antidepressants, what they try to do, Shannon, is they try to manipulate the amount of, you know, chemicals that are in your brain. So, you know, things like serotonin, to try and improve mood. This was going to be an entirely novel approach, an entirely new approach. What they were doing at Alkermes was combining together an opioid and a second compound that was designed to prevent the opioid, you know, from you becoming addicted to the opioid. So you had buprenorphine, which is the opioid part of 5461, and samidorphan, which was the new entity that was trying to counteract the negative or the risks associated with taking buprenorphine. So the idea here was, okay, we know that opiates have, you know, can improve mood. Is there a way that we can make them less addictive? And, you know, we look at the trial design, the way that Alkermes set up the trials to try and win approval. And then, you know, again, reading this backgrounder, wow. You know, and they actually said in the backgrounder at one point, the FDA wrote that there was, quote, a lack of alignment between the applicant and the FDA on this new drug application. A lack of alignment. I mean, it's really weird when you're being told by the FDA, hey, these are the things that you should probably do if you want to come in front of us and win approval. And you're just basically ignoring them and saying, no, we're going to do these things and we're just going to hope that you give us approval.
Yeah. And so, and that I think is what has been the big head scratcher here, because you sometimes expect to see this with really small, very early stage biotechs. You don't expect to see it with a company like Alkermes. I believe they're about $6 billion market cap company with approved products already on the market. So that was a bit of a head scratcher. And going back to that trial design, it's something called sequential parallel comparison design, or SPCD. And the reason that Alkermes was attempting to use this novel study design that the FDA didn't think had much merit was really trying to get after one of the major problems that they see with depression trials, and that's the placebo effect. And you see this consistently with drug companies that attempt to go after this depression indication, is that oftentimes when a patient is exposed to placebo, they have improvements, and it makes it much harder to see the actual effect of the drug in the trials. So Alkermes was attempting to mitigate this with this study design, basically they failed. I'm trying to think of a nice way to say it. They failed.
Downright failed. But I mean, because you think about the people who will enroll in a trial, Shannon, it's going to be the ones who are most motivated to want to see an improvement. And I think that that's probably why you see the placebo effect typically being high in these trials. And historically, that's been a big problem for drug developers because, one of the failure rates in depression and related disorders are much higher than they are in, say, other disorders where maybe you can connect the dots a little bit more easily to treatment versus outcome. And this two-stage trial design approach, basically what they did is they randomized for the drug and for placebo, and then they took the non-responders, and that's from that stage 1 that were in the placebo group, and then randomized again into either placebo or the drug. And, the FDA basically said, geez, we've never really considered this for any trial. We would need to see a lot more evidence to be convinced that this is a good way to design it. And I guess, apparently, obviously, Alkermes did not deliver that. It wasn't the only problem, though. They also designed the trial to take an average of outcomes over multiple weeks. And historically, when trials are designed for this indication, they use a fixed endpoint. So, the improvement at the 6-week mark or the 4-week mark or the 5-week mark, whatever. And in this case, Alkermes was trying to convince them, no, use an average. And the division, they actually wrote in this backgrounder, the division did not prospectively agree on this approach. So they already had told Alkermes, listen, we're not really comfortable with this. And then the third problem that Alkermes had, or the third decision that they made that went against, I guess, what the FDA was hoping that they would do, is they used an entirely new rating scale that they crafted. The Montgomery-Åsberg Depression Scale rating is commonly used, but it's a 10-item questionnaire. And they cherry-picked, all right? They created their own 6-item version of it that excluded some pretty important stuff like, suicidal thoughts.
The actual important things, and particularly more so the things that really have not just a long-term impact, but to your point, like suicide, concentration difficulties, reduced appetite, reduced sleep. These are all things that are important for someone who suffers from depression. Of course, in terms of what's next for the company, you've got, of course, just to back up a little bit for our listeners. So the FDA Advisory Committee, they make a recommendation to the FDA whether or not to approve a drug. The FDA doesn't have to follow those recommendations. And sometimes you've even seen the FDA be a little more lenient when it comes to psychotic therapies. But right now, Alkermes, they're still running, I believe, Todd, a phase 3B study. Not a lot of hope, especially given the trial results that we've already seen. But they do have a approval date of January the 31st, so we could find out before then whether or not the FDA gives the green light. But thankfully, it sounds like this isn't the only thing that Alkermes has in the pipeline. Right, Todd?
Yeah, it's not a one-trick pony. It already generates about $250 million in sales per quarter. If you look at last quarter, sales were up about 14%. It markets a drug, Vivitrol, that's used to help prevent relapses for people who are addicted to alcohol or that use drugs. Sales of that drug were $80 million last quarter, up 15% year over year. It also has an atypical antipsychotic drug, Aristada, that's approved and generating revenue growth for the company. And then it also collects royalties on a bunch of different antipsychotic drugs that are on the market already and marketed by some of the largest companies in the world. So, I mean, this is definitely a company that it generates revenue on an adjusted basis. It turns a profit, but this is obviously a disappointing failure because it's a multi-billion-dollar marketplace, and that could have turned this 5461 into a billion-dollar blockbuster for them. They do have their next thing that investors are going to want to keep an eye out for is results from a drug called, I think it's 3831. That's being evaluated in schizophrenia, and basically it is a version of Zyprexa, which is commonly used, but patents expired on it, so they can manipulate it if they want, and they are. They're manipulating it so that it doesn't result in weight gain, which has been a big drawback of Zyprexa. And phase 3 results are expected before the end of this year. If they're positive, they could file for FDA approval next year. And Zyprexa's peak sales were above $2 billion, so theoretically this could be could add nicely to its sales in the future.
Absolutely. And also, too, what's really interesting is Alkermes also has an early immuno-oncology asset in their pipeline now. It'll be interesting to see this traditionally CNS-focused company pivot into immuno-oncology, but certainly something to keep an eye on. All right, we're back, Todd. So let's turn the tables here. And we've been talking about things that are novel. Things that are actually novel and are having a true impact here is a company called Illumina. Our listeners will recognize them as the gene sequencing giant. That's ticker symbol ILMN. They made big news on the M&A front also last week, announcing a big deal to acquire a smaller competitor. I'm excited, Todd. You're finally starting to see the M&A ramp up. It has been really quiet, especially after so much hype went into 2018 with the impacts of tax reform. Oh, all the biotechs, all the pharmaceutical companies would do M&A. We're finally getting some noteworthy deals here.
Yeah, and this is, to me, this was a very surprising deal. I mean, Pacific Biosciences has been around a long time. Illumina has been around a long time, but they operate in slightly different parts of the gene sequencing market. And, PacBio has really just kind of been I don't want to say afterthought company, but it's a much, much smaller company than Illumina. Illumina makes gene sequencers that represent about 90% of all of the gene sequencing that's been done, since the Human Genome Project in the 1990s. So it is absolutely 100% a Goliath. It's got over 11,000 of its gene sequencing machines installed globally, and its sales are anticipated to eclipse $3 billion this year. When you put that in perspective, PacBio, their sales last quarter were only $18 million. So, they've got less than $100 million run rate compared to $3 billion run rate. And they have a fraction of the penetration that Illumina has within these researchers and these drug companies and these academic institutions and such that are doing all of this really, really fascinating next generation work in evaluating the genes in our body, in figuring out how to apply those lessons learned to things like medications that could really just move the needle on outcomes.
Yeah, and this was a surprising deal, but if you think about it, it kind of makes strategic sense when you look at the different tech behind the two companies. So Illumina has really been dominant on short read sequencing, and really for PacBio, it's been long reads. And if you think about genomic sequencing, it's a bit like, to use a metaphor that one of our colleagues used, it's like a jigsaw puzzle. Long reads allow researchers to have fewer puzzle pieces that they have to put together. And so for Illumina, it actually makes a lot of sense to not only dominate in the short reads, but now be able to take these complex pieces of genomic sequencing data, put them together, and hopefully solve some of the more complex gene therapy issues that we've been seeing as well.
Yeah, I think that, whenever you research anything or do anything, a lot of times, you can get the gist of it by spending less time on it, right? So that would be kind of like short read. Okay, it was functional, it's quick. In the case of Illumina's sequencing, it's a lot cheaper than long read. Now, long read is like doing a deep dive into a subject matter and finding out absolutely everything that you can possibly find out about it. In the past, you really haven't needed to have that level of granularity in gene sequencing. However, as we get more and more involved in things like gene editing and really sophisticated gene therapies that are extremely targeted, it's becoming more and more important to have as thorough a look at the DNA and the RNA as possible to make sure that you're not having any off-target suffering any off-target events or anything else. And also in the design of those drugs. And I think that what Illumina is saying is, okay, we absolutely dominate the long read space. The short read space. And by buying PacBio, we're now going to get, a really big footprint in the long read space. And if you think about Illumina's business model, they're so heavily embedded worldwide. I mean, their market teams, they've got 22 offices global. And many times they'll have a bunch, one of their clients will have a bunch of their own Illumina machines and then one or two PacBio machines. This is going to give them an opportunity to really introduce PacBio to a lot more people right ahead of some really interesting technology that PacBio was about to launch. Next year, they were planning on launching a brand new chip that could significantly increase throughput for long read while also decreasing prices, making them far more competitive with short read.
Yeah, so you've got them now expanding on the technology front and trying to get ahead of the competition. And speaking of competition, I mean, this is a field that's increasingly becoming more crowded. In addition to, PacBio, thankfully now they've acquired them. You've also got Chinese company BGI. You've got Oxford Nanopore Technologies, Roche, Thermo Fisher Scientific, and they're already offering sequencing and molecular diagnostic products and services. Amgen actually took out a recent equity stake in privately held Oxford as well. So they're now getting into the game. So it's interesting to see big biotech jumping up to the playing field. And also, too, on the focus of BGI, they plan to offer a human whole genome sample sequencing in less than 24 hours, and it'll cost less than $300 by 2020. BGI can already perform next generation sequencing for close to $600. So again, I mean, Illumina, as many of our listeners will know, is really trying to continue to bring down the cost of gene sequencing, but their competitors are right on their heels. I think this makes a really smart and strategic move just to try to stay ahead of the competition.
And too, Shannon, another thing that's important is a lot of times when you're doing the long read sequencing, there are drawbacks to both short read and long read. Long read is not perfect by any stretch of the measure. And a lot of times when you'll do long read, you'll also do short read to fill in the gaps for where the long read doesn't really come up with the information you need. So, the idea of being able now to have a one-stop solution where you're able to get my long read done by Illumina and my short read done may give it a competitive advantage against some of those other companies that you were just talking about. And that could become increasingly important because, by PacBio's estimates, the market that they were targeting is going to grow from about 660 million last year to 2.5 billion by 2022. That's significant growth, especially when you consider that Illumina's sales are tracking about 3 billion. So this could be, almost equal to where they are today, just in additional long read sales.
And Todd, I'm going to use the word synergies here. I hate that word when it comes to M&A, but this is actually one instance where I think the synergies could actually happen for a change and actually make sense. But what else should investors be watching, especially when it comes to PacBio?
Well, PacBio's had some delays in product launches in the past and some stumbles, if you will. So it'd be really important to see how that progresses. This deal won't close until 2019. It does, we still have to obviously get approval for this combination. Like I said, Illumina is the market share leader. Now, Illumina was asked this on their conference call, do you think you can get this through regulators? From Illumina's perspective, the answer is yes, because they are a short read company and PacBio is a long read company. It'll be interesting to see if regulators agree with that assessment. You're also going to want to see then once the combination is done, can they deliver on the timeline of releasing this new technology from PacBio that will indeed drive down the cost and increase the speed, making it more useful to researchers. And you mentioned the word synergies. I think most of the synergies are going to come probably from scale and from manufacturing and that type of thing. They're not saying at this point what the impact could be on the bottom line in 2019, but investors should know that PacBio is losing money. So, integrating it will create some sort of a headwind that's going to have to be offset either by increased sales growth because of greater penetration in the future from these new products or from some cost cutting somewhere along the way.
So lots to look forward to in 2019. It is really setting up to be a crucial year, not just for biotechs, but also on the gene sequencing end as well. And that's it for this week's Industry Focused Healthcare Show. Thanks so much for tuning in. Be sure to check us out on iTunes, Spotify, and now our own YouTube channel. Just go to youtube.com/user/The Motley Fool to check us out. And as always, people on the program may have interest in the stocks they talk about, and then Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. This show is produced by Ann Henry. For Todd Campbell, I'm Shannon Jones. Thanks for listening, and Fool on.